Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and the senior portfolio manager at McNichol & Associates Asset Management. Well, now, what is really noticeable is that individually, the FANGs now appear to be going their own way. In terms of their performance, they are looking about as disparate as the normal crowd of stocks in the S&P. The vaunted Magnificent Seven unity of action and purpose seem to have vanished. As things stand today, two of the FANGs are still happily mushing along. Amazon and Netflix are both looking to be heading towards their next higher boundary condition. Two are trying successfully, it would appear, to be breaking out to new highs. NVIDIA and Meta. One is sort of holding in but not giving me a signal, Microsoft. And three have been in minor bear markets, Apple, Tesla, and most recently, Alphabet. I suspect that a number of important decisions will need to be made in the period ahead, and I want to alert you as to what those decisions might be as we wait for some market guidance. Anyway, without further ado, let's take a close look at the FANGs and what went on in the past week. But, as always, before I do like to say thanks to everyone who likes this video and all our subscribers. It greatly helps to grow our channel, and we appreciate it greatly. Okay, we'll start off with Amazon, which had broken out above its bubble price at 7.4 times book and has just been moving up steady, a little bit slowly recently, but definitely, I think, in an uptrend. Note that the fair market value has slowed down a little bit, which may account for the flattening out of the performance, but I think definitely in an uptrend. Netflix actually all looks almost the same as Amazon doesn't, except just one breakpoint higher. And again, I think that this heads towards its HB2 successfully. Meta has been sort of struggling at its bubble price, but that isn't surprising, is it? Because as I have showed you before, the bubble price has been a long-term maximum valuation for the stock, and the market has a memory. However, it does appear to be breaking out, and given the strength of the results that this company has been showing lately, causing it to jump twice, I think may well be heading higher. I think that this is a good breakout, and I like the look of this one. NVIDIA has come up hard against its HB7, which is 43 times book value, but looks to be breaking out nicely further. And now I think we have to put this back as a buy. Microsoft has come up against its HB2, which is 12 times book value, and look at that, once, twice, three times. I don't know whether it's three times a lady or not, but nonetheless, it's once, twice, three times. Can't break out so far, although it is encouraging a little bit, that we can see that there's a little bit of an uptick now in the fair market value, so perhaps the market is getting a bit more confident in this stock. Now, Apple, a stock I have not liked in some time, and has been drifting, but the operative word is drifting lower. Now, it has fallen to its HB5 valuation, which is 33 times book, and look at what happened the last time that the stock Apple fell to major support. It had a nice little rally, not a game-changing rally, but nonetheless, if you'd been looking to sell your Apple stock, you had a better chance to sell a little bit more, and that may be about to happen again. Again, the fundamentals of this company, unfortunately, do not impress. Tesla has had been kind of struggling, but on the south side of its HB1 price, which is 9.5 times book value, and has finally decided it had enough there and is now setting back down towards its bubble price, 7.5 times book. And look at what happened the last time that Tesla got here, eh? It had a very, very beautiful rebound. So I think as the stock gets down to its bubble price, I might be very cautious about becoming too bearish. And unless it actually breaks down from here, there may be a good buying opportunity. Finally, Alphabet. And I had thought that the MSG price here, that's 5.5 times book value, would hold nicely. It has not, but this is not the first time that the stock has come down to the MSG price, sort of failed a little bit, and then got itself back on side. Now, I think that you will remember that I have what I call a rule of thumb, the 3% 5-day rule. And up until now, at least, every time that the stock has broken support at the MSG, it has not triggered my 3% 5-day rule. So we're not going to break out into a sweat yet. Now, to briefly recap, 4 of the FANGs are in a bullish modality, and 1 is dithering just south of an important support resistance level, and 3 are questionable. Last week, as you'll recall, there were only 3 of the FANGs in what looked like a clear market direction, 2 heading up, Amazon and Netflix, and 1 heading lower, Apple. It was the remaining 5 that needed our attention. Well, Meta has broken out, and of course, last week I had raised it to a buy. While it remains close to the line, it is holding as we speak. I do expect another strong quarter, and it appears as if we have a genuine breakout to a new all-time high. Nvidia has also broken out to a new all-time valuation high. I would like to see a bit more affirmative action to get the shares truly clear of that HB7 level. That's 43 times book value and 38 times earnings. But so far, the market action is solid. The 5th stock in what I might consider to be my FANG portfolio is Microsoft, which remains within a stone's throw of its HB2 or 12 times book, although thus far does remain south of a breakout. I would only raise the stock to a hold, to a buy, however, if it can break out, and for the time being I rate the stock as a hold until we see market confirmation of its AI credentials. Now, the 3 weak and questionable stocks are Alphabet, Apple, and Tesla. As you saw, Apple had fallen to support at its HB5 or 26 times book and must hold. It has been falling, oozing lower might be a better term, since August of last year, and as Rodney Dangerfield might say, just can't get no respect. With no visible growth, I have to agree with the market. However, look at support is support, and we can't ignore it just because of personal feelings. Keep a close eye here. However, if it does choose to rebound, I doubt that it will be a runaway situation. A stock, perhaps the stock to keep very much in mind at this juncture, is Tesla, which had fallen through support at its HB1 price, that's 9.5 times book, and now looks to be heading towards its bubble price. As you just saw, it did rebound there very strongly before, and I would not rule out at least a good pop when it gets there again. The alternative, a failure to hold here, is not pretty to contemplate. Although a failure here would be very much in line with the fundamentals, at least as I see them. As for Alphabet, the failure to hold the MSG price is very poor action for an AI stock. To be fair, I thought that it would find support here, and it apparently has not. And it raises a profound question in my mind. Are we experiencing the first sign of weakness in the AI market mania? This is not the first time that Alphabet has faltered here, however, and I do hold some optimism that it will pull back on side, as it has not yet triggered my 3% 5-day rule. Do not turn your back on this one, however. In total, summarizing where I would see each of the FANGs at present, I'd want to be holding Amazon, Netflix, and buying or adding to Meta and Nvidia on their breakouts. I would hold Microsoft, but cannot rate it as a buy unless or until it can break out over its HB2 price or 12 times book. Apple and Tesla remain in my bad books from a fundamental point of view, but may well offer potential to rebound of some magnitude as they are close to SVA support. So keep an eye out. That leaves me with Alphabet, which I had previously rated as a hold, but it has failed at what should have been excellent support. Still might come back on side, but keep my rule of thumb in mind. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.